What if the market is completely misunderstanding what is happening with XRP right now? What if this period of sideways movement, price pullbacks, and uncertainty is not weakness at all, but the early setup for a major supply shock that could send XRP moving much faster than most people expect? Because when you zoom out and stop focusing only on the daily price candles, there is a much bigger story unfolding underneath the surface. And that story is growing demand colliding with potentially tightening supply. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Right now, many traders are watching XRP move lower over the last 24 hours and assuming nothing exciting is happening. But sometimes the most important developments happen when price looks boring. In fact, some of the biggest moves in financial history have happened after long periods when most people stopped paying attention. And that may be exactly what is happening here. Ripple has been signaling something very important. Demand for XRP keeps expanding, not shrinking. And when Brad Garlinhouse talks about demand, he is not talking only about retail traders buying XRP on exchanges. He is talking about broader access, expanding utility, growing ecosystems, and institutional adoption. Those are the ingredients that create long-term value. One major example is wrapped XRP now going live on Solana, and I think many investors are underestimating how significant that actually is. Because this is bigger than one technical integration. This is about interoperability. This is about XRP becoming part of multiple ecosystems. And this is about crypto moving away from tribalism, where one network tries to destroy another, toward a future where many networks can succeed together. That is a huge development, because every time XRP becomes accessible in another ecosystem, every time utility expands, every time another network embraces XRP liquidity, the foundation for future demand gets stronger. Now combine that with what is happening with XRP ETFs, and things start becoming very interesting. For years, legal uncertainty kept large institutional money away from XRP. That was the barrier. That was the excuse. But now that regulatory clarity has improved, that door is opened, and capital is beginning to move. We have already seen strong ETF inflows connected to XRP products. We have seen periods with zero net outflows. We have seen consistent institutional interest. And perhaps most importantly, we have seen something bigger than money flows. We have seen validation from Wall Street. And that matters because institutions like Franklin Templeton, Grayscale, and Goldman Sachs do not involve themselves in assets casually. These firms manage enormous amounts of capital, and they do not position around stories they believe have no future. They do deep research. They evaluate risk, they assess utility, and they allocate where they believe opportunity exists. That is why I believe what they may be seeing is something the broader market still does not fully appreciate. And that is the possibility of an XRP supply shock. Now, what exactly is a supply shock? It is simple. It happens when demand rises faster than liquid supply can meet that demand. And in XRP's case, several things could drive that. ETF demand can continue absorbing available XRP. Institutions can continue accumulating and locking supply in custody. DeFi applications can reduce liquid float. Long-term holders can refuse to sell. And at the same time, broader market conditions can improve, bringing in more capital and more retail FOMO. When multiple demand drivers collide at once while available supply tightens, that is when supply shock dynamics begin forming. And this is not just speculation. JP Morgan has projected XRP ETFs could attract between $4 billion and $8.4 billion in first-year inflows. Think about what that means. That is one of the world's biggest financial institutions projecting potentially enormous demand entering this asset. And if even part of that happens while exchange liquidity tightens, the pressure on available XRP could become significant, because here is what many overlook. Not all XRP is sitting ready to be sold. Some is locked. Some is held by institutions. Some is tied up in custody. Some is committed in DeFi. Some is held by long-term investors who are not selling at these levels, which means actual liquid supply may be much smaller than people assume. And that changes everything. Because markets can appear calm until suddenly there are not enough sellers at current prices, and when that happens, price can reprice very fast. And that is why I believe what we are seeing now may not be weakness. It may be preparation. Preparation before broader recognition. Preparation before capital rotates into the market. Preparation before institutions increase exposure. Preparation before retail realizes what is happening. And what makes this even more interesting is that this exact supply shock conversation used to be everywhere when XRP ETF discussions first began. Everyone talked about what would happen if ETFs started pulling XRP off the market. Everyone talked about how institutional demand could collide with limited liquid supply. Everyone talked about the possibility of a major repricing event, but as price consolidated, that conversation faded, yet the accumulation appears to have continued. And that is important, because narratives can cool down while fundamentals keep improving, and often the biggest opportunities emerge precisely when the crowd loses interest. We have seen something similar before. In 2017, XRP moved thousands of percent in a remarkably short time. Most people did not see it coming. Most were positioned too late, and by the time the crowd realized what was happening, the move was already underway. Now, I am not saying history repeats exactly, but I am saying markets often rhyme, and today there is arguably an even stronger setup because this time there's something 2017 did not have in the same way, and that is major institutional participation. Goldman Sachs has disclosed major XRP ETF exposure. That is not a small development. That is serious capital taking position. Grayscale has made it clear XRP has a place in diversified digital asset allocations. Franklin Templeton has highlighted utility. These are not random players. These are some of the biggest names in finance. And when multiple major institutions begin validating the same asset, that should get attention. Because institutional participation changes everything. It changes who buys, it changes how long they hold, it changes liquidity dynamics. And it changes the probability of major supply dislocations. Even Grayscale leadership has emphasized that investors are moving beyond simply thinking about Bitcoin and Ethereum. They are starting to consider the broader digital asset market, and if that trend continues, XRP naturally becomes part of that conversation. Why? Because XRP is battle-tested. Because it has real utility. Because it has infrastructure. Because it has survived years of regulatory pressure. Because it has relevance in global settlement discussions. And because institutions increasingly recognize those things. So when I step back and connect all of this together, Ripple expanding utility, wrapped XRP growing ecosystem access, ETFs absorbing demand, JP Morgan projecting major inflows, institutions increasing exposure, exchange liquidity potentially tightening, and broader crypto conditions likely improving over time, I see the foundation for something potentially much bigger than the market currently expects. I see the ingredients for a supply shock. And if that thesis begins playing out, price may not move gradually, it may move aggressively. Because when markets realize supply is tighter than expected, repricing can happen very fast. And that is what I think many people may be underestimating right now. They are focused on short-term volatility while ignoring structural demand. They are focused on pullbacks while ignoring positioning. They are focused on fear while institutions appear focused on accumulation, and that disconnect may not last forever. Because eventually, fundamentals have a way of forcing attention. And if that happens here, what looks like a quiet period now could later be viewed as one of the most important accumulation phases in XRP's history. Ripple sees the opportunity. JP Morgan sees the opportunity. Franklin Templeton sees the opportunity. Grayscale sees the opportunity. Goldman Sachs sees the opportunity. The real question is whether the broader market recognizes it before supply dynamics force everyone to. Because if a true supply shock develops, many people may look back at this moment and realize the signs were there all along. And what appeared to be a slow market was actually the setup for something much bigger. This may not be the end of the XRP story. This may be the phase where everything starts to change. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching.